Hey, what's up, guys? This is Bobby with Growth View again. And today we've got an awesome guest. It's Jesse DiLillo with JSJ Sustainable Investments. And I'm excited to interview him because he was telling me a little bit about his story and just some big changes he's done, shifting from single family to a cash flow model, exiting flipping. So I won't tell the story for you, Jesse, but I'd love you to give a little intro of yourself, and thanks for being here with us.
Thanks for having me, Bobby. Jesse DiLillo. I've been real estate investing for the past 13 years with my family. We started with tax lien investing, moved into wholesaling, did fix and flips, out-of-state turnkey rentals, out-of-state flipping, and now we took our last couple luxury flips and we decided to keep them and turn them into Airbnb for cash flow. So we wanted to get out of the single family space. Primarily, it was really trying to get into the cash flow model and not having to be so active, I guess, on the fix and flip side. So as you know, with flipping, you're constantly having to do a project. There's never a time where you could step away and still have money coming in. So with the cash flow model, we liked the Airbnb, where obviously great cash flow, great returns. People are seeing all over the country. A lot of my friends here in San Diego actually own Airbnbs, and that kind of shifted my mindset and taking the old business model, right, of the flips and just saying, okay, why don't I just refinance it after? And instead of pulling out $80,000 or $100,000 after the flip, we'll just refi, keep it, and then we should have enough money in there to pay for the furniture and get everything ready to go. So that's where we decided to switch out of that. And to be honest with you, flipping kind of became a hassle through the pandemic. There was labor shortages, material shortages, just extended timelines, um, a lot of materials. The price of materials and all the finishes went up. So our projects going 10 to 15 to 20% over budget's not really ideal for the flip market, especially with the new material costs. So we decided to just shift. So we stopped flipping at the beginning of last year. Just did everything I could to learn about multifamily and connected with local syndicators here in San Diego to see how I could bring value to them and underwrite their deals and see what I could do just to learn that whole process. So we spent about um, 11, 12 months working just with other syndicators to help support them on their deals with some financial connections that we had, and then investors that we were able to convert over from our single family lending to multifamily investing, which is a much better return for them as well, seeing as most of the multifamily you're not paying capital gains on.
Gotcha. Yeah, I've seen. I'm friends with a few flippers, and a lot of them have been kind of expressing that like you've always got to be doing a deal to make money. You don't get the cash flow, but I think that's a great strategy. And tell us a little bit about the story. Like, what got you into real estate? Like, what were maybe some of the first few deals, and like, what did you learn just in those beginning years of like focusing on flipping? What were some of the big lessons?
So I got started in real estate from an infomercial. Funny enough, I was in a hotel room when I was like 16, trying to and I saw this thing over and over about tax lien investing, and I convinced my parents to start an entity. So we did the tax lien stuff just passively for a while. That wasn't really like an active business. It was just something we did bought a couple tax liens here and there for several years, and then we decided to 2016 launch the fix and flip business. So we went through Fortune Builders training and did the whole wholesaling model, and then the flips in California were a little higher price than we like doing. So we decided to move the whole model out to the Midwest and do it remotely, which required a lot of time flying out there, meeting with different contractors, inspectors, um, building the entire team, the designers, engineers, architects, everyone involved in the project. So um, as far as flipping goes, it was a great model for us to get started. But I think to build real generational wealth, like our goals are, we needed to shift that into the multifamily space.
Cool.
Um, Go ahead.
Well, nice. Yeah, one thing I'm really interested in is like I think flipping it catches a lot of new investors' eyes just because you see that really fat check. But that's obviously like a nice upside. Like who doesn't love a big chunky paycheck? But there's also some like taxes and things maybe people are not considering. Like, tell us a little bit, obviously about some of the pros, but what were some of the cons that really like led to the shift? Like legacy, wealth, cash flow. I think those are some great points, but
Um,
explain that a little bit.
yeah, so the taxes is really it's the worst thing, for our investors because we used private money for everything. So those private money lenders were getting hit with short-term capital gains and getting a 1099 every year. So rather than them being 1099 investors, now they get a K1 investing in the syndications, and with through bonus depreciation and cost segregation, they're likely not paying anything on that cash flow that comes in. So it was just really shifting that, and then obviously for us, um, we didn't want to pay the same taxes that they were, right? Every time we flipped the house, it was like, all right, 20% of that money is gone right away, at least. No matter how many write-offs you have, you're always going to wind up paying the IRS. So that that section of it was a big shift for us, and we really wanted to extend that to our clients that were, had trusted us for the past several years to invest and flip houses and make them significant returns, to move that into a better tax shelter, I guess. Kind of say tax shelter, for them. Not that I'm a CPA or tax advisor, it's just the things we've learned from years in the business.
Yeah. Yeah, I can imagine the mindset of some of your investors, because I saw a chart the other day where I think it was in 2015 or so, 1.2 million homes on the market. Now there's below 300,000. So it almost makes a lot of sense just to hold on to some of these assets and see where the next year goes. I can imagine things are only going to get a bit tighter, even with rates going up potentially.
Yeah, I think the supply is so far down, and you have all the heavy hitters in there, like Blackstone and other hedge funds coming in, buying up those single family assets, kind of shifting it into a renter's nation. So if you're flipping right now, it's probably a good idea to hold on to that maybe a little longer and let it cash flow, rent it out and keep it, because you never know where the market's headed. And I think it's always good to have a nice stable asset to fall back on.
Yeah, absolutely. So what's been big for you guys? Like I know you built a team. I'd love to hear about the team that you've built, and maybe like what kind of processes have you put in place that's helped that team be successful in this transition with your deals?
Yeah, so we just started Cardinal Capital Group right in December. So we have not done a deal yet. We're still on our underwriting process. We're helping we're going to co-GP a deal out in Houston. Flying out there next week to check that out, to confirm that it's, everything's in line with the underwriting, and how the teams describe the deal. So we're going to fly out there and check that out. And if everything checks out, that'll be our first deal that we're co-GP on. So the team I built is single family investors as well. My partners Keith and Carly transitioned into the multifamily space last year. They wholesaled a couple properties, a couple multifamilies out in Memphis. Then decided that they wanted to. That was their way of breaking into the space. They invested in a lot of LP positions and a few deals with some of the syndicators we know mutually, and they decided that we should all put a group together and just go after the multifamily space. So we have another person that we work with, our partner Mike, that's out in New Jersey, and he's doing a lot of the broker contacts, the underwriting, like the back and napkin math before we move into deals that we actually want to pursue. I do a lot more deep diving into the underwriting, as well as Carly, and then Keith and I are both doing more of the capital raise side as well. So we're still growing our team and expanding, and just trying to network and meet as many different syndicators as we can. We joined a mastermind group with Grant Cardone to kind of kickstart that and accelerate the learning curve a little bit quicker. There's about 100, and I think it's like 250 people in the group now, but there's a lot of multifamily investors in there. So just being able to be around people that are constantly doing deals and are looking for partners, I think is going to help accelerate our growth.
Awesome. And when it comes to making the shift and moving into this first deal, tell us a little bit just about that deal and like what markets you're looking in, also outside of Houston.
So this deal is it's a strong value add deal. So there's a big renovation, big lift on it. There's 4.3, just a capex on 134 units. So they're putting about 30,000 in per door. It's really, really, that's a pretty large project compared to most of the things we've looked at. They actually already closed on the project, so they're just backfilling it. Um, the KPs in the deal had the capital to close, so they didn't do a raise at the end of the year because it was right around Christmas that they were closing. So they decided to hold off, just close it, and then move on to doing the raise this year. But pretty excited about that one. From my underwriting, it looks good. From their underwriting, it looks good. I think Keith and Carly also agree that it's a good looking deal. But like again, I said, I had to fly out there and see it. It's a little different than like the single family stuff. Didn't necessarily have to fly out there over the past couple of years as much, just because the team kind of handled everything. Like our contractors and realtors, the architects, the designers, everyone worked together. So like that side of it was pretty remote. I just focused on more of the investor relations on it. But with this, being our first deal, I want to kind of see it, touch it, feel it, make sure that the neighborhood's exactly kind of what they're saying, and just confirming, dotting the I's and crossing the T's. So,
Gotcha. Well, nice. Well, what's gonna be your guys' goals over the next, let's say like 5 years? Like, what's the long-term goal outside of doing more multifamily deals and building cash flow? Are you guys maybe gonna get some vertical integration built in, or are you gonna like really just stay focused on the acquisition and the underwriting and maybe bring in like partners for other aspects of the business?
so we plan to partner with other. We plan to do co-GP deals with other investors that are in markets that we're looking at already, who have boots on the ground. So we're not necessarily having to do the entire lift ourselves. I think our group is really strong at raising capital and underwriting deals. So for that aspect of it, I know a lot of groups struggle with the capital raise side. So if we can bring value that way, not only just bringing our investors, but just our years of experience, because between us we have about 25 years in real estate collectively. So it's a good chunk there, and the more we can partner with people and the more people we can bring up, I think the better. So my goal is to just keep connecting with investors in different markets and seeing how we can provide value to them, and obviously trying to all build. We're all on the same path, so I think collectively, multifamily is a little different than single family. Single family is very competitive, a lot of scarcity mindset, obviously low inventory that you just mentioned. Multifamily seems to be a little bit more of a team sport, which is that's something I really enjoy. I'd rather work with people rather than always trying to like compete, and that whole side of the business is just it's much different.
Yeah, absolutely. Um, So another thing I'm really interested in, you brought up before we dove in, was you're also kind of focused a little bit on Airbnb, and you've heard some really good stories about that. Like I'm really fascinated in that, and I'm looking at some of my first Airbnb deals. So I'd love for you to just share insight, because that seems to be a very popular thing for first time investors. I even had a buddy yesterday say, "Hey Bobby, I'm trying to buy an Airbnb. I have 100 grand. Where do you recommend I start?"
Oh, that's awesome. Yeah, the Airbnb space is really interesting. So we about a year and a half ago, we were going to buy a warehouse in Pittsburgh and do a condo conversion onto it. The guy that was selling it had just built two new townhomes, and he sold one. He sold for like 800 or 790 or something like that, and kept the other one because it paid off the debt. And he decided to try the short-term rental space, and he was making, I think he was making anywhere from 70 to 80 grand in his first year as an Airbnb operator. So that to me was a huge return. That we were getting similar numbers from our Airbnb property manager, um, similar returns because the size of the homes that we had and the quality of the finishes in it. So if we can make that on four or $500,000 investment, 70, 80 grand a year, it's a really good return. Um, it's much better than we would get if we were just to rent that home. It's significantly better than if we would have had something like here in California, just traditionally rented. Um, the the investors that are doing it that I know, some of them have been able to leave their corporate jobs just from their Airbnb income and then focus on the multifamily side that they were really interested in. A couple of them are just taking the cash flow from the Airbnbs and buying more Airbnbs with it, kind of doing like that Burr strategy, but Airbnb, which I think is a really cool idea. We're looking at possibly doing a community, an Airbnb community, like a eight to 20 unit, smaller either a smaller apartment complex or just a bunch of smaller single family like studio apartment kind of type community that would all be like by a lake or something. So we're looking at some land in several different markets right now. In Michigan, we're looking at along the Colorado River in Arizona. We're looking at a couple places in Florida that might work for that as well. So we're trying to see if we can make almost like a campground, just like a little community that people can go to and rent all the cabins or one of the cabin or whatever that would be. So that's something we're preliminary working on right now as Airbnb, just on the side outside of the multifamily.
Oh, that's exciting. Yeah, my mom and dad, they're not retired, but they've always wanted either like a cabin or a beach house, and they got a little two bath condo, and their numbers are coming out to be the same, and they get to go there once a month, and relax. So
That's
that's
awesome.
that sounds great, man. Well, cool. And one thing with the Airbnb space I've seen gotten pretty popular is I think the website's called like hipcamp.com, where you can like rent dirt or like yurts and like these experiences and stuff. Like, what have you just noticed in the market in regards to that? I know a lot of these experiences have gotten popular, especially during COVID, just because, stay at home, wearing masks, you're not seeing friends and family as much. Like,
Yeah.
that sounds a little bit aligned with what you guys are doing, like you said, like along the river, or maybe like rent out all the cabins. Like, how are you approaching that and like differentiating you guys like in that aspect?
So we were looking at doing it container home style. So that was like one of the I've seen people do like tree houses, which is crazy to me that like you can rent a tree house and it's $500 a night and people are paying it.
Yeah.
I feel like you know if you can just differentiate yourself or just make it unique, just provide a good experience. So if we're by a river, have like kayaks and paddle boards and stuff like people can use and just give them more of an experience. If there's if you're in the mountains, have mountain bikes and stuff that they can rent and use or just included in part of it. So we're going to look at, obviously, depending on the area, what sort of amenities that we should include there for everybody. But for now, with our ones in Pittsburgh, we're just going to see how they go as is. And the Airbnb manager's got a lot of great ideas. For example, the one property that we just refinanced yesterday, he wants to put a speakeasy in the basement because it's like a
Oh,
old kind
cool.
of yeah old get an old style like Pittsburgh bar and just throw it in the basement. A bunch of their sports apparel, whatever have you. So it'll be a cool, just another little unique experience for each for the guests there. So it's something like I think if you get a good person who's already in the space, like I'm all about partnering with people that are already in the space and already understand it, rather
Mhm.
than I think that cuts your learning curve, significantly. So instead of me trying to like go there and self-manage and put a team together for Airbnb, we just partner with somebody who's already there, who has, a system in place, a team in place to do everything, and they know what people in that area are looking for. So I think that really shortcuts the whole process for us.
That's awesome. So you've basically been a full-time real estate investor since about the age of 16.
No, I left my corporate job in 2018 to do this full time. So
Okay.
yeah, yeah. So my in 2017, my father passed away, and he always worked like two jobs. Always had a side hustle. Was always doing something outside of the real estate and his regular job. And I saw him work every day until the day he died, and that you know setting and the pressure and everything that he had to go through, working the corporate job on top of the other stuff, it was just like I didn't want that for my life. I didn't want to work until for somebody else till the day I died. I see a lot of people that unfortunately they're going to have to work the rest of their lives. They're going to have to work until they're 70s, 80s years old because they didn't have something set up. So um, we had enough in our savings that we could have. I was able to step away from my job and do this full time, and the business really amplified just because I was able to focus. I took 40 or 50 hours a week from my other job, and now I put it into this on top of the 20 to 30 I was already doing. So when you're putting 80 hours a week into your business rather than 50 into somebody else's, it really amplifies that. So I just wanted to I wanted to accelerate all of that by moving out of that job. So I was able to do that because I had enough saved to step away, and obviously a little scary for a few months going from a paycheck every week to oh my God, we got to wait till this house sells. That was a little sketchy in the beginning, but after we got over the initial hump, yeah, it's just been real estate full time ever since. So.
Gotcha. Cool. What would you say to an investor maybe who, let's say they're a high income earner, making 200 grand a year, but they're just getting into syndications and, maybe placing like 50 or 100 grand into a deal. A lot of these, they're only cash flow and maybe like 4% year one, and then they ramp up over time as value's added and they exit the asset. For someone who really wants to build cash flow fast and be able to make that leap, what would you recommend? Maybe like part-time flipping and then putting that money into syndication to build a syndication bank, or what would you tell someone who's just maybe brand new getting into this?
If you're brand new, I would just, well, first, I think everyone who jumps into multifamily needs to be an LP first, limited partner in a deal, just so they understand how the deal functions, how everything operates, and how to run, actually how to run the deal, right? So if you have no experience on that side, it's going to be hard to jump in as a GP on a deal. To build up additional cash flow, wholesaling, single families is still a good business to make cash and stack it up and then throw it in a deal. Um, Crypto has been pretty successful for a lot of people, to build up capital pretty quickly. I know a couple. Prime example, one of my partners took out $2 million out of crypto last year, off of a $5,000 investment. So, there's some things like that, but obviously that's a little bit more risky, and you have to be a little more risk tolerant for that. But um, yeah, as far as getting into it, yeah, I would say that wholesaling, maybe flipping, or if you can buy a property, lower cost property, say at 100 grand, and you can go out and buy a $250,000 house and Airbnb it and get some cash flow going fast. I think that's a great way to build capital as well.
Awesome. Nice. Well, cool. What would you say has been like the most impactful thing? Obviously, you have a tremendous amount of experience, starting at such a young age and then in 2018 making the leap. But what's been maybe the most impactful thing you've done, whether it be something you've read? Was it a specific, mentor like your father, or are there certain maybe podcasts that you really have enjoyed that have made an impact on your career?
I think a lot of it is, I just continue to educate myself. So I join mastermind groups. I do coaching programs. I know people, a lot of people frown upon doing coaching programs. Like, why would you put money into this when you can go do something else? I think the coaching programs kind of gives you a cheat sheet or almost a shortcut, on how to get into stuff. I really enjoy listening to different multifamily podcasts. The Bigger Pockets podcast has always been good. The Multifamily Takeoff, with Rich Summers and his group over there at Pack 3 Capital. That's a great podcast. See, who else do I listen to? Oh, Multifamily by the Slice. That's a new one that I just started listening to. That one's really good. My friend Dre's podcast. I listen to a lot of like Grant Cardone stuff. That's kind of got me like pumped up for multifamily. Outside of like my friends who are doing multifamily, that said, why are you flipping houses? Like, you're doing way more work. You need to just shift into this. Like, you're already raising money. Like, just raise money for something better. So there's been a lot of different influences. I can't really necessarily put it on one, because there's a lot of different people that we've listened to, and even in the single family space, like, the Fortune Builders guys are great. There's a lot of really good information there. Capital raising from them, learning different ways to speak with investors, learning different ways to acquire properties. I think a lot of that can be transitioned into the multifamily space. So I think continuous education is really the key to our success. And for a lot of investors we know, I think it's the same sort of thing. You got to keep educating yourself and really submerge yourself into the industry. And I'd say taking action, like actually taking action, like taking massive action every single day and making sure you're doing something to improve your business and your life every single day is super important.
I agree. I love that last part. Yeah. I work a full-time job, and I usually kind of like you, and it sounds like your father was too. I'll wake up early in the morning while the family's still asleep, knock out some work after work, and when everyone goes to bed, do the same thing, and you definitely see it multiply. And when progress is made and it's exciting, it kind of gives you life and helps you stay awake those extra hours if you're
Yeah,
having to work 80 a week.
but it's exciting. It's exciting to be when you're building your own business and you're doing it for you, and that this, all this work right now and for the next 5 years, you might not make a dime, but at some point it's going to take off and it's all going to be worth it. There's yeah, it's a little sacrifice, but I don't even look at it as a sacrifice. of the time. Like, people going out and partying, like doing whatever, like that's cool. I'm gonna work. So one day I can just not have to anymore. And if I can reach that by like 40, instead of having to work till 60 or 80 or whatever that is, that'd be great. So that's really my long-term like ambition.
That's the dream. That's the
Yeah.
dream. Well, anyone who watches knows I'm a Bitcoiner. I always ask people about, and you brought up kind of crypto about, Bitcoin, blockchain, its impact on real estate, data centers. That's obviously like a big thing, like in real estate now. Do you have any thoughts on just the real estate industry at all being impacted by just Bitcoin or blockchain at all?
I think the future is going to be very interesting with blockchain. It's going to, if I can sell my house like an NFT online, to somebody via crypto, and you do all the documents, everything's on the blockchain, and it's quick and easy. I think it's going to eliminate a lot of jobs and create a lot of opportunities, for other people to get into the industry. I think there's a lot of people that are comfortable in the old ways and don't want to make that shift, but crypto's not going away. It's only getting stronger. It's only getting more use cases. So, I would, I'm excited because I'm pretty far into crypto. So we have a couple coins that really performed well for us.
Nice. Yeah, yeah. I guess unless you love paperwork, you might not be into it. But I have a feeling people would love to reduce their paperwork.
Oh yeah, absolutely. And everything's, the my friend Shane did I think he sold a house as an NFT. He was over, where is he? He's north of LA. He listed a house as a for sale with the NFT. So when you bought the NFT, you got the LLC that the house was that owned the home. So that was like an interesting, first way of watching. We listed a couple houses for Pittsburgh and accepted. We accepted Bitcoin, ETH, and whatever crypto people had as like partial payment. But no one jumped on it right away.
Yeah.
But it was just something that we figured, might as well try and see what happens, right? I'm always open to it, and I think the crypto space is really interesting, and the people that just kind of buy it and hold it seem to be the most successful in the space. From what I've seen, the time value of locking your money up and just leaving it there and not looking at it and going to make more money elsewhere seems to be a great plan.
Yeah, I agree. I think like buying and holding real estate's obviously helped anyone who's done it over the last 50 years. And there was a study by Fidelity that said the best investors are people who either forgot their password or died because they can't just trade and be a degenerate, just moving in and out on emotional decisions. So I'd agree with
Yeah.
you there.
Yeah, I did the one that's like the majority of my wallet is Hex, and you can stake it anywhere from 1 day up to 15 years. So I did 1 year to 15 year staking ladder, and I don't have to look at it. So whatever the price is, because I don't have to look at it until like, November of each year my stake ends.
Got it. Got it. Well, cool, man. Well, if people wanted to reach out to you and get in contact, whether it be investing in a deal or to maybe network and learn more about what you're doing, what's the best place to reach you?
You can usually reach me on Instagram. I'm at invest with JSJ. You can also go to our website, cardinalcapgroup.com. You can go to our other website, investwithjsj.com, and that's more of the single family residential stuff. Or you can call or text me, 619-724-4446. I give out my number. I'm not really scared to give that out. People just, you can call, text, whatever. I'm open to it.
Yeah, it sounds good. Anyone listening, don't be afraid to shoot your shot, make the connection.
Yeah, absolutely. I'm happy. We're in this industry to help people, right? And I think we talked about that earlier, teamwork and bringing everyone up as a collective. So, any way that we can help people, I'm always happy to.
Awesome. Well, we appreciate it. I'll be sure to put that contact information just in the YouTube notes below. And we appreciate you joining us today, Jesse. Thanks for
Yeah.
taking some time.
Thank you, Bobby. I appreciate it.